Hey everyone, Ty here. In today's video we're going to be talking about the biggest myths in Bitcoin, all the biggest lies, and we're going to be setting the record straight. Let's not waste any time, hit that like button, hit that subscribe, and let's go. Bitcoin is a bubble. Oh my god, it's going to burst, it's going to crash, Bitcoin's a bubble. No, this is a lie. A bubble basically is an economic cycle caused by a rise in market value which is impossible to sustain. It's when something goes up and people can't explain it and they know that it's not going to be going up for much longer, ultimately meaning that the bubble will burst. This is not the case with Bitcoin. A bubble is just a cycle. Over the last decade, Bitcoin has gone through multiple cycles, and it has gone through multiple bubbles, and it is just a cycle. As with the new company or new technology, there will be peaks and there will be troughs, and there will be utter steep bursts, or bursts, however you want to say it. Earlier this year it went down to under 30k and now it's back up. Everyone will say, oh, it's crashed, the bubble's popping, the bubble's bursting. No, it is just a cycle. In the late 90s you had Amazon plummeting 95% off their value, and now look at it. Like, people then were probably like, oh yeah, it's burst, it's popped, it's crashed, it's down in the ground, it's not gonna get back up. And now, however many years later, all right, it's now up there. The trends of Bitcoin are reflective of the new market. This basically means that you'll see surges and you'll see pullbacks, and basically you'll see longer wait times between these surges and between the pullbacks. So it will be going up for a fairly good amount of time, and then you'll see a pullback, and then there'll be a longer amount of time before you see another surge. And that's just how it happens. It's what you're going to see until the volatility settles and until the market starts stabilizing. Particularly for Bitcoin personally, I think it will start stabilizing when it's past the 100k mark, but we will see a pullback before then. Like we did when it got to 60k, we saw a pullback, and we're around that point now where inevitably there is going to be a pullback. We just don't know when. But if you're investing in crypto, if you're investing in Bitcoin, then don't worry too much, because like any cycle, after a pullback, eventually it will grow unless something completely crashes it, unless some adverse news comes out. Then don't worry too much about the pullbacks. Number two, the second myth that we hear all the time is Bitcoin is not real, it has no use. And you make payments with Bitcoin without a bank or a third party. Bitcoin is scarce and there's a limited supply, meaning that Bitcoin is as easy as sending an email. You don't have to go through a bank, you don't have to go through the whole bank verification thing. It's usually just through a fingerprint on your phone, and then you can go send and receive money without government, without a bank or anything like that. In May 2010, you had an individual who managed to purchase 2 pizzas for 10,000 Bitcoin. Now that was just like groundbreaking, because it hadn't been used to purchase anything before, and unfortunately for that individual, those coins are now worth 4 billion. So I hope those pizzas were good. So now you've had Tesla, who previously accepted Bitcoin, and we're not far away from more and more businesses adopting this as an acceptable currency. In September this year, just a couple of months ago, El Salvador became the first country to adopt Bitcoin as its national currency. Now, don't know how that's going for them, but it means that there's people being more accepting of this being a currency, people being more accepting of using this for payment, and yes, so the potential is there. Now, the third myth is that Bitcoin is for criminals. Now, I can kind of relate to that, because Bitcoin got a lot of bad reputation with being associated to the dark web, but in all fairness, no matter what the product is that you're launching or what the service is, you're always going to get people that misuse it. For example, the initial purpose of alcohol was for medical purposes, and now look, the initial purpose of money wasn't to buy drugs and weapons, but there you go, you're always going to get a small amount of people that ruin the reputation of it. You're going to get a small amount of people who misuse that product or service. There's a lot of products and platforms, a lot of new products and platforms where this happens. People do find loopholes and they misuse it for their own personal gain. It's just how it is. There's always going to be that minority of people that do that. The good thing is that with the blockchain, it kind of acts as like a ledger. It lists the transactions, and because it's an open network, it's easier for authorities and, to be honest, anyone to track illicit activity. Nowadays, you need to contact several banks. If you're trying to conduct an investigation, you've got to go through, you've got to trace the money, contact several banks and track the money from one account to the next. With the blockchain, you basically have the list for you. It is right there. So yeah, I can kind of see where you say it's for criminals, but it's not the case. Number four is that Bitcoin is just gambling. And you could kind of say that about any investment, to be honest with you. And the reason people think that Bitcoin is gambling is because of the volatility in the crypto market. In the space of a day, you can lose or gain half the value, and that's because the crypto market is very volatile. Unlike something like the New York or London Stock Exchange, which opens and closes at a set time every single day, you don't get that with cryptocurrency. It is open as and when for anyone around the world. And that means that the volatility in it is crazy. It can be traded at any time by anybody. And that means basically it can react faster to news, and it leads to more volatile movements within the market. Now, from an investor's point of view, there is rationale as to why the market value of Bitcoin is increasing. Like, it's got real world use, and there's rationale behind these movements. With gambling, you don't have that rationale. The odds are in favor of the house, and you're fighting an uphill battle. Now, with Bitcoin and any cryptocurrency, you can balance out the odds in your favor. You can do dollar cost averaging, you can diversify your portfolio, and that basically means that by investing consistently over time, especially with the dollar cost averaging, if you're investing consistently over time, it doesn't matter if you buy it high or low, you're basically averaging it out, and that's putting the odds in your favor, which you can't do at a casino or anything like that. I talk about dollar cost averaging in a little bit more detail in my full short investment course, which I'll link just up here. But for the time being, that's all from me. I hope you understand Bitcoin a little bit better, and if that's the case, then smash the like button and subscribe to the channel. I post every week, and I'm here for any questions, so do hit them down below in the comments. Thank you for watching, and I'm out. See you in the next one.